How you guys doing?
What's going on?
Good.
Yeah. Well, markets have been pumping a little bit.
Certainly better than last time we were together. It's seems like there's some more optimism all around. Everything's a little bit greener. We have had a couple of green days in a row. Certainly, my portfolio is getting close to being recovered from the dip, so I'm feeling good.
Yeah, it's nice to see the green.
It's definitely coming back. Question is, are we going to fail to overtake the all-time high, and maybe we continue to range sideways for a few more weeks, or are we just going to break through?
Well, I'm just going to keep saying this because I say this every time for every video that we do, but like, man, I get a little bit more stressed out the more we pump, like the further away we go from the 20-week EMA. Like we're going to come back to it at some point, and I just don't see how we can keep getting further and further away from it. It touched it like 4 or 5 times last bull run.
Yeah, right now we're a ways away from it.
Yeah.
That's a big dip from where it is right now, though. Currently, at least.
Sitting at 34 and some change. I mean, honestly, if we were to fall back down to that, I mean, we can certainly test it, but that would invalidate this parabolic advance on the weekly.
Depends on the time scale that it did it, I think. What if we range sideways here at this 55, maybe 52 level for another week, maybe another 2 weeks, and that average ends up at like 38, 40, quick wick down and then launch up. I can see that happening.
The thing that I'm looking at is like when you go to the 2017 advance and you get those tests of the 20 or 21 EMA, right? And it kind of looks like a claw where it's like grabbing on and pulling, and the price action is pulling itself up higher. It already did that. And that was back around 30,000, right? So it came down and it actually didn't test. It didn't test the 20 or 21 EMA, but it still made that similar shape, just like in 2017. So if you draw a line from the previous low to that low and extend it out, if we come down and test the 21, we would break that line. So on a log scale, that would somewhat invalidate the parabolic advance. Now, that might mean you have an intermediate bear market that lasts for a short period of time. And honestly, I mean, we don't necessarily want that because all of us want the price just to keep going higher. But if that were to happen, like let's say we don't get a mania phase coming, later in the spring or early summer, the longer that's pushed off, the higher probability that the bull market is extended into 2022. And that can give us a lot higher prices in the long run. Because if we continue to go parabolic, and let's say we have a blow off top, which there's a lot of technicals pointing to a blow off top between June, July, and outwards towards October. If that were to happen, if we go with parabolic, straight mania, blow off top, we're probably in for a bear market in 2022. So time will tell.
That's kind of what that's kind of what I get at when I say it's stressing me out a little bit. I mean, like how far off and how long can we really stay off of that, that 20 week before, if we don't come back and give it a little love tap here, like I could see us having a blow off top, early summer. And in that circumstance, it's hard to, anything can happen, but it would be surprising to see almost 300K by early summer. I mean, at this point, we would need to be going like 10K a week, 10K a week.
Yeah.
Yeah, that would be pretty insane.
Let me share my screen real quick. I'll just show you what I'm talking about. Where is it?
I think I understand what you're talking about because I've been looking at the same thing.
Yeah. So let me turn on the EMAs here. Whoops. And so the EMA 21 is the yellow line here. So that's right there. And what Odin is talking about is that, so I use the 21, but it's basically the same. You know, it's sitting right under 35,000. So, you know, because we haven't actually touched it since, I mean, our last test is back in September. And then it's just been off to the moon since then. And if we go back to 2017, again, we're on the weekly, you could see that you had multiple tests. We tested it here, we tested it here, we tested it here, and then there was only really one test after that. We didn't even really test it, and then blow off top. And so what I'm referring to is because we're on a log scale, remember, we take it on, if we go in traditional scale, take it off of, so on linear scale, it just shows up as an exponential curve. An exponential curve on log should be a straight line. And parabolic will be somewhat exponential on the log chart, if that makes any sense. So when you draw a line, when you go parabolic, you really, you know, one of the early signs would be breaking these lines. So that would be an indicator. If we were to break this line here, that's somewhat of an indication that we might have a trend reversal. Doesn't mean it's long-term trend reversal, but could be a short-term, and then maybe we actually would come down and test this 21. The other thing is you could take this line from the previous test here and extend that out. And like maybe we, you know, that's almost kind of right there at the 21. It's pretty close. So you'd come down and test that. What happened here? Connection problem. Lost you guys.
I was just saying Zoom needs to decentralize their servers and put them on the fucking blockchain.
But anyways, you get what I'm saying. So like we basically advanced. So we were kind of growing like this on this line here. And then we had this next similar shape like in 2017. Right? And now we're following this line here. And we tested it once. We tested it again. So if we keep going, I mean, we can hit some pretty high numbers. So another thing to look at, just kind of zoom out here. Let me get rid of these EMAs. If you were to take, and I think this has been trending some on Twitter, but if you were to take the low of the previous cycle, which is here in 2018, so our ultimate low where we had, you know, our final capitulation, and it's been pretty much a bull market since then, and flip that over the halvening. So this yellow vertical line here in May is that halvening, you know, where the block rewards are cut in half. So if we take our low from that, take the number of days until the halvening, and then add that same number of days from the halvening, you can basically create a range. So what I'm getting at is that this low right here, we can basically create a window in time, roughly, you know, symmetrical around the halvening, which would be here. So these two vertical lines basically represent that. And so basically, if we take the absolute low, it would be roughly right here, and that represents the high. So the same thing, if you were to take the low which was here. I know this, we could go on a longer, with more history of Bitcoin, but that is the low from the previous cycle, and flip it over the halvening from 2016. It's literally like right there at the cycle top. So I'm not saying that's going to play out, but it has the past couple cycles. So if that's the case, you know, we could see this continue to extend up into this range. And it would look something like this. So we could see price either sitting on top of this line or maybe somewhere in here. And it's kind of crazy, some of the prices you're looking at. I mean, anywhere from, you know, mid 100s to $250,000 up to $500,000, which would be insane. So somewhere in here. So I mean, it's suggesting that a blow off top could be somewhere in here. And if you look at the dates, that's June to October. So if we don't have some kind of intermediate sideways action to slow things down, we could enter a mania phase and we could see a blow off top this summer potentially. So
let's hope not. I think it's also you know, where, you know, it's worth noting or that a lot of those times where Bitcoin kind of ranges sideways, that that's when we'll see a lot of our best gains on, you know, altcoins and stuff. And
right,
you know, when Bitcoin's pumping like crazy, people a lot of times will sell their alts and chase the pump, you know? And so a lot of times you see Bitcoin have a really strong day. Altcoins are not going to have such a great day. So, you know, again, the longer this process draws out, I think the more we're going to see out of our altcoins, out of our DeFi coins and stuff like that.
Yeah, you could be correct. Well, I mean, last time Bitcoin had its blow off top, and then the alts shortly after had their blow off top. So, I mean, just looking at Ethereum, if I create that same window in time from this summer, I mean, we're on the similar parabolic advance, which last cycle for Bitcoin, we hit the 17.944 on the fib. So, I mean, that's a price of just shy of $25,000 for Ethereum.
That would be pretty insane if Ethereum
we came up.
That.
Well, what's interesting is you've seen this on Twitter. Roll Paul and his GMI publication for Real Vision showed this as well. But basically, if you take Ethereum price action at 1 million wallet addresses and overlay that with Bitcoin at 1 million wallet addresses, it happens to be just over $1,000 of price. And when you overlay that, we're seeing very, very similar price action to that of Bitcoin, back around $1,000 or so. And if that's the case, and we have similar psychological hype cycles, because I mean, Ethereum has a similar network effect and scaling effect to Bitcoin in terms of communications, Metcalfe's law, etc. If we have similar hype cycle, you know, it doesn't mean it's going to blow off in the same with the same amount of buying support. But what if it does? I mean, if we would fail to hit this 17.9 here, that's $25,000. So, I mean, even 11 is 15K. And there's the economic backdrop right now. The money printing, another 1.9 trillion. You know, the Fed balance sheet. Like there's just so many things to make people want to move into alternative assets. You know,
that's true. That does have a big impact, and I think that 16,000 number is not unrealistic, in my opinion.
No,
for Ethereum,
not at all. And
well,
go ahead.
You know, Ethereum has, especially considering, you know, if with the London hard fork, once you know Ethereum becomes deflationary, I was reading that once the EIP 1559 goes into effect, the amount of Ethereum that would have been burned in the last month was something like 16 million Ethereum, and which puts it well into deflationary on like an annualized basis. And
I think that might be a misnomer. I mean, I could be wrong, but I don't think Ethereum will be straight deflationary because of EIP 1559. Well, because what it does is it burns the base fee for transactions, and in periods of mania, where there's just an insane amount of transactions, Ethereum can go and likely will go deflationary. During bear markets, I'm not sure if it will be. So I could be wrong on this, but that's what my understanding is, that it makes it possible for it to go deflationary. It doesn't necessarily mean it's going to be deflationary continuously moving forward. But it's insanely bullish.
Yeah. I mean, that makes sense. I think these were numbers from the last month extrapolated over the year.
It probably is.
I guess it'll be interesting to see what happens with further adoption going into the future. And, now that DeFi has started to get some more attention, and NFTs are seeming to like work their way into the mainstream, that we'll see. I haven't run the numbers myself, but it's an interesting thing to think about.
Have you guys listened to the most recent interview with Vitalik on Tim Ferriss's podcast with Naval?
We have not. I think we need to put that on our list.
Yeah, check that out, because he's talking about scaling. And of course, there's different scaling options on how different projects are approaching it. But Vitalik, clearly, man, he's so good at just like articulating and explaining things in such a simple way. But basically what he was saying is that like Ethereum and the way that they've chose it, and most of the devs for ETH 2.0 are on board with basically scaling layer one, which is the core blockchain of Ethereum, to proof through a number of ways with EIP 1559. And the first step was to transition the network to proof of stake. The next step is to move all of the network demand away from proof of work onto the proof of stake ETH 2.0 chain, and the network will move forward from there. That alone increases throughput. I forget exactly what he said, but it increases throughput on layer one. And then with layer two, they're pushing towards these optimistic rollups, which also optimistic rollups scale through mathematically. It's the square of computing efficiency, computing power. So as computers continue to get efficient through Moore's law and architectural improvements on chips and stuff like that, Vitalik is saying that we could see it's actually about 100x increase, and Naval is saying over the next decade it's going to be crazy. So the amount of throughput in terms of transaction on Ethereum, like, it's crazy. And Vitalik's saying this could happen in just a few months, as far as the layer one improvements, and then I'm not sure the optimistic rollups, maybe that as well. And then of course the computing efficiency enhancements over the next decade. It's going to eat in traditional finance. It's going to eat the entire. We could see Ethereum become as valuable as Bitcoin, and that's a crazy statement, because everyone thinks like there's a lot of Bitcoin maxis that thinks everything's going to happen on Bitcoin because it has the most liquidity, the deepest liquidity. It's got the longest history, the largest network effect, and so on. But a Turing complete smart computer that's capable to run DeFi and smart contracts and build options products and insurance protocols and all of these things. Sure, digital gold holds weight in people's portfolios, and having the security of proof of work on Bitcoin is extremely valuable. But having smart contracts and very high security, and then transaction throughput, and having it go deflationary in times of mania and high transaction, and if transactions continue to grow, maybe ETH does actually become deflationary in the long run. What if we see ETH at the price of Bitcoin today or higher? We could have 100K ETH by, in 5-10 years.
I mean, I don't think that's an unreasonable statement. It definitely has a lot more utility. I mean, I don't think Bitcoin's going to go away or get devalued with respect to it. But in terms of the vast amount of applications the Ethereum can be used for, it definitely has a lot more potential.
Right. Yeah, I completely agree. What's on your mind, Odin?
I see you thinking over there.
I was just thinking about what
where their sunglasses at.
He's daydreaming.
I was just thinking about what $100,000 Ethereum would put the market cap at. That'd be
in the trillions.
2 trillion.
That would be
something
crazy.
like that.
Yeah, it's definitely in trillions.
So, yeah, I mean, especially with these new
we're at 200 billion right now.
You know,
we're at 200 billion.
It's also interesting to think about though, because 100x scaling from where we are now is certainly a large improvement. But I don't even know if that's enough. You know, I think that just points to the continuing viability and need for, you know, a multitude of layer 2 solutions, and how necessary they will be into the future. If we see real mainstream adoption on transactions on the level of, like, you know, what Visa processes, 100x, I don't even know if that's gonna cut it. That's where, you know, we might start seeing stuff like various layer 2 solutions like Loopring.
Check this out. Can you guys see this? Let's see here. So this is Vitalik's writing. So Vitalik.ca. And he published this in January. It says an incomplete guide to rollups, and he talks about layer 1 versus layer 2 scaling. So I think what you're describing, Odin, in terms of the needs, like, it's a combination of scaling on layer 1 and layer 2 to hit this demand. And if you scroll down, so like there's all these different options. So there's state channels, there's plasma, and then there's rollups, and you have optimistic rollups and then ZK rollups. And so, I mean, if you really want to know about this, like, go through and just read Vitalik's writings. Like, he is so passionate about this project. Like, he's already rich as hell. And this is a guy who's incredibly smart, brilliant, and, you know, a true thought leader in the space. And the fact that he still works as hard as he does just shows how passionate he really is. So with that said, let's scroll down here, and there's a nice chart that shows kind of the trade-offs and what's achievable. So, you know, just comparing rollups alone, which in the short term for layer 2 is going to, you know, build on top of these layer 1 scaling solutions with EIP 1559 and proof of stake, and all the validator nodes and side chains and whatever they're called, that's going to scale layer 1. It's going to increase the throughput. Then you add the rollups on layer 2. So basically what he says, and I think we've talked about this in the past though, is that optimistic rollups are really optimal short term and very achievable, like very near short term. Like, we're talking months. And ZK rollups, although they exist on things like Loopring, which I'm super bullish on, longer term, ZK rollups are going to be a bit more secure, and they're very fast and have some high throughput. So there's a table here that kind of shows all the different properties and what's good and bad about them. As far as fixed gas per batch, so like what happens with optimistic rollups is, like, basically all these transactions can be batched together, and then their I don't know if it's their hash or whatever can basically be put on layer 1. So layer 2 is essentially like a separate network where the compute of these layer 2 batches, like the proofs of that, then get written to the layer 1. And then that way, like, you can prove it out. And so, you know, he's saying 40,000 transactions or so with optimistic. ZK rollups 500,000. So also withdrawal period, it takes a little bit longer for optimistic rollups because he says that there's a delay to give time for someone to publish a fraud proof, and he goes into detail on all this, but essentially that there's some stuff that has to be done that takes a little bit of time, whereas ZK rollups is like near instant. You just wait for the next batch. But optimistic rollups, very low complexity, and ZK snarks are very new and mathematically complex. So, and as far as generalizability, he says the optimistic rollups are easier. Basically, Ethereum virtual machine rollups are already close to mainnet. It's like very close, so it's easy to do. ZK snarks are difficult on the EVM, and it's much harder than proving simple computations. So, but there's people doing it. Now, optimistic rollups per transaction on-chain gas costs are a bit higher, and once you scale ZK rollups, the cost would actually drop even more. So I think what we're going to see in the long run is we're going to see these short-term scaling solutions come to fruition. We're going to see costs drop, and then we'll see some of these longer-term scaling worked on over the years, probably through the next bear market, and we'll see costs continue to fall. And Ethereum's just going to continue to eat more and more of traditional finance. You're going to see, institutions start to adopt Ethereum and build out new products on top of these computing platforms. So really, really, really cool stuff.
Wonder what the transaction volume possibility is with some of those different combinations.
Yeah, you have to listen to it. He talks about this. It's again the Tim Ferriss podcast with Naval and Vitalik.
I mean, Visa processes like 2,000 transactions a second, I think.
Yeah, 1 to 2,000. It's gonna kill Visa.
150 million transactions a day. So how many are we processing now on Ethereum?
I don't remember the batch size. I mean, you have a block every 10 seconds. So
1.1 million average daily transactions.
Yeah. And then what's Bitcoin? It's like almost laughable.
It's 3.5 times less.
Yeah. I thought it was more than that.
This was as of Q3 2020. So I don't know what the exact more up-to-date numbers are. But I mean, again, that's like what I was saying is interesting is like the kind of congestion that we're seeing right now on the network with 1.1 million transactions a day. And, we're going to need some serious scaling to be able to match, the kind of like broad mainstream adoption that would be necessary to match something like Visa at 150 million transactions a day.
Here you go. Last 24 hours, Bitcoin 350,000 transactions, Ethereum over 1.2 million.
Yeah.
And last hour, Bitcoin 14,500, Ethereum 52. So, I mean, it's crazy. You look at Bitcoin Cash, which is supposed to be, a block size debate and you're supposed higher throughput and stuff and cheap. Like, it's the same.
I don't think that has anything to do with their capabilities.
Right.
Yeah, why the hell was Dogecoin XRP on here?
Because Dogecoin is a fork of Bitcoin. And I'm not sure about XRP. Isn't Dogecoin a fork of Bitcoin? I think it is. There's
I don't know.
Faster
actually.
block time. The block time is 1 minute. Why is Bitcoin Cash 14? I don't even know what the target is for
actually
Bitcoin
a fork of Litecoin.
Okay. Yeah. But Litecoin is a fork of
Just
Bitcoin.
yeah, exactly.
Yeah. But Litecoin has a 2-minute block time, whereas Bitcoin has a 10-minute block time. What's crazy, you look at the hash rate. Like, look at Bitcoin's hash rate. It's freaking insane. It's, yeah, like the most computing power, most secure network in the world by far. So obviously that has a lot of value. So that's why, like, Bitcoin clearly has a major use case, which is, you know, the settlement layer of the internet. So like basically all of this stuff could happen on Ethereum. Like, you could essentially have all of this stuff and these rollups on layer 2, which then isn't settled on Ethereum. And you could probably take these transactions on Ethereum and settle like really important things on Bitcoin, you know? And like a good way of thinking about like Bitcoin is, and Ethereum in some sense, but Bitcoin by far the most, is a trusted timestamping server. And you don't necessarily have the exact 10-minute block time every time, because sometimes it's fast, sometimes it's slow, but in the long run, it averages the 10 minutes because of the difficulty adjustments. So like if you want to have like a message that you know is going to be, you know, is going to be around, well, years, decades into the future, well beyond our lifetime, you could put a message into the blockchain and you could go back and know exactly within, you know, it's roughly on average, you know, the amount of time, you know, in history, exactly when that message was placed. Like, when can you do that? What else can you do that? I mean, we have carbon dating, but I don't think it's that accurate, you know? So it's pretty crazy that this technology exists.
Lucky time to be alive.
It's amazing. Great time to get rich.
It's great.
Great time to get rich as fuck.
Certainly no other opportunities like this.
That's absolutely true.
Yeah.
Well, speaking of which, what are you looking at there?
I was just looking at the transactions historical chart. So this goes all the way back from the beginning. I just wanted to see if Bitcoin's really, this is on the log chart. Not really growing.
I was going to say, do we want to talk about any other coins other than Bitcoin and Ethereum? Touch on anything else today?
Yeah, I mean, the only other thing that, you know, we could touch on, I guess, you know, both you're a big Badger bull and you got me into it, which, you know, I've been really following that project closely. And Badger, some of the data that I've seen recently just looks absolutely amazing.
No doubt.
Well, we can look at a little bit of that data here. Dune Analytics is showing, you know, some of the Badger trading volume. You could see we had this big, you know, parabolic advance in Badger price, and then we saw a contraction. It seems to be turning around. The big thing that's interesting to me, we were talking about this in the chat today. You know, Dig is still in the gutter, and Dig. Both you and I were pretty concerned about Dig, although maybe seems like it's bottomed out. I don't know. And maybe the market cap will start rising again. But what's really interesting is if you correlate the price of Dig. So just go to CoinGecko real quick and look at Dig. So basically, like looking at the market cap, you could see, you know, we peaked back in February. And then if this is a bottom, which is starting to look like it might be, you know, it might be bottoming out. And this would be a higher high, which would be a great sign. And is likely the case. So we're from, I don't know, mid-February to, you know, March 7th kind of. If you go and look at the revenue from, you know, the Badger revenue, you can see these massive, so the purple was WBTC. Revenue, daily revenue of WBTC. You can see on February 9th, there was a massive drop in revenue. So
I was trying to wrap my head around this about what would cause that and how it would correlate to Dig. And
well, if you are an LP, so the Treasury is collecting the LP, and it's basically compounding, right? The LP from the automated market makers, in this case, you know, Sushi and Uniswap. Those fees are going to be paid out in these native tokens, right?
Correct.
So if the market hits a peak and whales are dumping, which they were, and they start dumping Dig and dumping Badger, they're pulling BTC out of the pool. So if you're an LP, you put in, you know, equal amounts in terms of value into the liquidity pools, and then these whales come and fuck you by stealing all your BTC. So I think my understanding is basically that there's less BTC in the pool, that maybe there's less fees associated with it. And then the opposite would be
if a bunch of liquidity was removed on that day.
Yeah, yeah, exactly. And maybe I'm wrong on this. We need to dive deeper on this, but it's just interesting. So here's this massive drop in daily revenue. And then and that's on February 9th. And then this massive increase in daily revenue of WBTC, wrap Bitcoin, on March 7th. So February 9th, March 7th. So now let's go to February 9th. I mean, that's right up here. And then March 7th, boom. If that's a bottom, then we might see some sideways action here and maybe start to trend up again. So that was it. Very interesting to me. And hopefully we see Dig, you know, we don't care about price as much, but really we want to see the market cap. We want to see the market cap increase in value. So the other thing is just the revenue overall, very high. It's starting to grow. What else?
Man, I need to get on this Badger train soon. I've been looking at it.
Yeah. So if we want to look,
I'm looking at Uniswap and SushiSwap, Dig liquidity and volume, and both of them continued to rise from the 9th to the 20th. I don't see any. Yeah, I mean, there's no big moves down.
Yeah, and like,
I don't know.
Look at the Dig users. Look at the Dig users over time. I mean, it's
kind of stagnated.
Yeah, but it's still growing. It's not like it's dropped off. And the total Badger DAO users is definitely growing. It's slowing down a little bit, but we've also kind of, you know, price action has slowed down just the whole market. Badger revenue is still increasing. The treasury is still growing. So there was one other Dune chart. This one was of Badger itself. And Badger, I mean, I think Badger by far is like, just like you were saying, is so undervalued, the token. So if you're gonna buy anything, Bojangles, I would get some Badger. And
that's what I was saying. I've been looking at it.
You can pair it with WBTC and farm, but you can also just stake it in the. You can just buy Badger and then you could stake it and earn some yield on it.
Yeah, stake it in the pool.
Yeah, but trading volume's still looking pretty good. I mean, it dropped off a little bit. These last. Wait a minute. Does this stop at February 9th? What's going on here?
And there's
This
looks like
not,
this.
This must not be up to date. I just noticed that. That's kind of weird. This is
all of these. Yeah, all of these numbers are. If you look on one of the other ones that you sent, it is more. It stops at March 3rd, but trading vol. Oh, that's trading. That's Dig trading volume.
I think this is the most accurate one right here.
Yeah, there it is. So I mean, we had the peak around the high, and we've been kind of declining again since. But I think, you know, it'll be. There's some talk. I don't think anything has been officially announced, but I went to one of the kind of like town hall group voice chats that they hold on the Discord from time to time, and I asked a couple of questions to the team, and they are planning to expand to other chains,
right?
Like Binance and Avalanche, and you know, do like tokenized versions of Badger on that chain, and when you look at some of the things that are possible on Binance, where there's low fees. So right now we see Badger like harvesting fees and reinvesting, compounding it like every 1 to 2 days, and that probably costs a couple $100 to do. On Binance, it probably costs like 40 cents to do that. And you see some of the yield aggregators on there, like Auto Farm, that optimize the amount of compounds per year up to like 50,000 times per year. Which, I mean, it's insane. That's probably like $1,000 a year in gas fees to do it. It's like nothing.
What's going to happen when Ethereum fees fall? The DAO will vote, and they'll just start compounding like crazy.
Yeah, you'll see a lot of interesting. I mean, a lot of these on Binance, you start looking at, a lot of them are using like emissions of cake token, which for some of these LPs, the emissions of cake are like 1 to 200% APY right now, right? And you can auto compound that like 100 times a day for like a total of like 1,400% APY just from that like 100% emission or whatever. So, and from trading fees on top of it. So I think it's going to be really interesting to see Badger expand into some of these other chains, and also for them to be bringing their like core ideology of like expanding the use of Bitcoin. In especially, in DeFi and stuff. So, right, before Badger, there weren't really big pools of Bitcoin on Uniswap and Sushi. If you look now, the deepest liquidity is with Badger, and with are the pools that are incentivized by Badger. And if you look pre-Badger, there was not nearly as deep liquidity for Bitcoin on these chains. So it'll be interesting to start to see Bitcoin being moved to some of these chains. But then on top of that, if for example, Badger brings a Bitcoin pool to Binance and Avalanche, it would probably be the most heavily trafficked, and we would see a percentage of those protocol fees being redirected back to the DAO, the stakers of Badger token on Ethereum, which I think is interesting. It's all really, I think there's a lot of really bullish stuff coming up the pipe, and you just look at the team where like, you just know that these guys are smart and they have a reputation, right? You see like Andre Cronje from Yearn talking about Chris Spadafora, saying he's just like insanely driven and never stops. And like,
dude, he was like an insane bodybuilder. He can endure some pain.
Yeah. So I think I'm incredible. It's so undervalued.
That's what I like
man.
to hear, man.
I think we could see $300 on Badger.
It wouldn't surprise me. It wouldn't surprise me. And what's the supply is extremely.
It's 21 million. It's the same as Bitcoin.
Same as Bitcoin. So like at the very least, we could see 300 this cycle, and it could go up into the thousands. Next cycle, maybe, who knows? The longer this cycle, the higher all these prices can hit. So that's what I like to hear, man. Right? Public founders, teams that are verifiable, right? Guys that get shit done. And those are the guys you want to back, right? Projects that have great product market fit and a great value proposition. And you need those people to go out there and get on these streams and get in front of, to get in the media and, to really market the projects. And that's really what's going to get that, accelerate that network effect. So hell yeah, that's awesome. Well, anyways, with that said, there's a couple other projects we could talk about. There's a couple I'm researching, man. They look so freaking bullish, but I think for now I'm going to stay quiet on those. I need to get my due diligence done. There's so much happening, man. We got all kinds of derivatives.
Save this for the next ones. I think
we got all kinds of derivative products. There's a lot of stuff going on. But yeah, all right, guys. Well, it was a good chat, and we'll catch you later.
All right, see you, everybody.